What are the best trading time frames or how I trade just 2 hours a day making all the millions I make? Of course, I'm making fun of, of a certain genre of videos. But I will say this about if you're starting out and you feel that you need to sit in front of the screen all day, um, let me speak to that type of trader. Uh, you don't. You don't. Now, you might want to because it's exciting or you feel like you're doing trading activity. But to me, when I think about mindfulness, I always ask the questions of myself like, why do I do what I do? What needs are being met? And unless you're running a high frequency trading platform like Citadel, that's trading basically all day long using computer algorithms, there's really what is really productive time for you, right? So I don't let myself fool myself into thinking that I'm doing work when I'm really just being entertained. So the most liquid time frames, all right, during the day are typically around the open and around the close. What you can see, and this is kind of both statistically proven but also kind of folklore at this point, is that institutions that are looking to acquire and make allocations into a certain stock or even a certain sector, they're not going to put an order to put down, let's buy 2.5 million shares of XYZ at the market. They have to work those orders all day long, and they might be doing them in $5,000 or $10,000, 5 or 10,000 share clips. So they'll be working that order throughout the day. Maybe it might take all week. It depends on the size, and it depends maybe even if they're going to use options like just directional trades, puts and calls to get that order filled. So one of the things, if you're having trouble figuring out how to spend your day and you're learning your craft, is go look at any particular day. Look at the last, say, 10 days of whatever your favorite stock is, and then look and see if you're looking at, say, even 15-minute bars. I'm not saying trade on 15-minute bars. I'm just saying look at the volume, right, in 15, 30-minute bars. Doesn't matter to me. And then just see what you'll kind of see the volume. It'll look like a little bit of a U. You'll probably see a lot of volume earlier on, and you'll probably see, and I'm talking about 9:30. I'm not talking about the pre-market, right, or after the closing bell at 4 o'clock Eastern. Just look what happens in the first half hour after the opening bell and the last half hour of trading, and kind of see how those time frames compare to the rest of the day. Now, from there, you might say, okay, well, now what? Okay, perfect. If you're seeing a breakout or an instrument start to move to higher territory from a price standpoint, based on, say, the previous days, weeks, and months, if the trends are going to eventually be strong, those campaigns will typically see higher highs. You see? Now, suppose yesterday was a big breakout day on a particular name and it closed near the high. Now we have a situation where is there going to be follow through? So oftentimes you could look at the next day and say, okay, the market was up a lot Monday. Let's see how it opens Tuesday, there might be follow through. So if you're looking on the short end of things, you can look and see the opening ranges. There might be opportunity for you to do that. Where the rest of the volume kind of drops precipitously during the rest of the day, you can kind of come back and look at the close to see, okay, are those institutions continuing to add to their position because they're not done buying? If you're a big mutual fund or an exchange traded fund and you're trying to acquire inventory, like I said, you can't put that order down to the floor all at once, and get filled and then be done. It's going to take a while. Now, that's just one institution. If you're looking at a whole host of funds that are looking to add to their inventory because of fundamental reports, there's better earnings, maybe the sector, right? Because the sector in stocks are secular, so the sectors kind of go first. Then you could look at the individual stocks in those sectors. You can say, okay, well, now I get it. Maybe that's the 2 hours that I'm going to spend. Is I'll do my preparation the night before. I'll see what names were up big, and I'll see Whether, because think about it, if you believe in fractals, right, then you can really trade a similar entry system across any particular time frame. If you actually walk around saying that the market is based on fractals and fractals exist, then what's the difference if you're looking at cup and handle on one bar or cup and handle for in on a daily chart? Does it exhibit similar characteristics? So, because if you're walking around saying there's fractals, you'd think that that was the case. So this is how you can bifurcate your day. Maybe then intraday, you can start doing better research. Maybe you can do your back testing at that point and not participate in any particular, trading. But you do your research, you do your preparation. You see, okay, well, what's up on the day? You watch a certain particular stock, it might be up, say $10 coming into the close. Is it going to close strong or does it start to sell off? So there again, now you might find opportunity where, like, I remember doing this with Apple Computer. Well, it was Apple Computer. And it had gotten blasted on a certain downgrade. And it was off like $28 all day, just weak, selling. And I was like, well, it's still in an uptrend. It's getting blasted on this day. Let's see what's happening. Is it going to continue to weaken and stay weak throughout the whole day? Now, again, I'm in Los Angeles, so it's like 12 noon, and I'm looking at it, and I'm saying, okay, let's put an alert in the system and see if it sticks its head up a little bit. Let's see if it recovers, say, even 10% of the move. So I'll put an alert like $3 above the low at, say, where it would only be down 25. So if it was down 28, I'll call that 30. So I'm looking for it. Does it rally $3 off the low coming into the last hour? Why? Well, because we're still in an uptrend. Two, you're just dealing on a downgrade. You're not even dealing with any real fundamental change, just somebody who stepped up and decided to downgrade the company or what have you, or make a bigger stink over, in those days they were like, can they get the 6-year-old kids who were making the phones, to enough component parts to be ready coming into the holiday season? I think that was what spooked the tape. And so I remember watching it, and although it's not my main trading strategy, I remember being able to capture, like, I set stops above the market and scaled in. I think I required like 8,000 shares. I made almost 50K on the day, which is not my normal way to trade. But you can do this by watching the open and by watching the close, right? Again, I was already a pro. I was probably coming up on 20 years of experience. We had all the money that we could ever need under management. So it's all relative. The dollar signs don't matter, right? Forget the dollar signs, things in terms of percentages. So, but it can be done. And then going back to, yesterday's lesson, when I was starting, I wouldn't have been able to do that because I wasn't focusing on that time frame and that strategy. I had to come back to it. You need to think that you're going to be in this game for a long time, like think 10, 20, 30 years. So really, you have nothing to worry about. Just focus on getting good at one thing and sticking with that. But if you're having trouble figuring out like what's the best time of the day, you might consider looking at the open and the close, as they tend to be the most liquid times, right? And if you're trading small, so volume's not going to really matter for you, but you can see a lot of activity where you might see trend continuation patterns, right? Either at the open from yesterday's activity, because the big timers can't really execute a lot of volume in the pre-market. So they wait for the opening bell, and then their execution traders start to fill the orders. So you can see continuation from one day to the next, and or look for it coming into the close. If the market's really sold off and you're at 2 standard deviations from the mean, maybe it's going to mean revert before the end of the day. You have to watch the tape. Maybe it took a dip during the middle of the day, but it looks like it's going to rally into the close and kind of push towards the highs. That might be an opportunity for you as well. So as far as like how to do it for 2 hours a day, there's my snarky little response to how you might be able to pull that off looking at the dynamics of the market. You see? Just my 2 cents. Check out this video here.